Good morning. Today is Monday, May 20th. And if you recall, on Friday, I went through a trade in the E-Mini futures contract. And this is what you're seeing right now. This chart is E-Mini S&P 500 futures chart on a 3-minute chart. Okay. If you recall, at the very beginning of the video on Friday the 17th, I discussed this trade right here when the market is testing. Okay, the market just opened. I'll get to current market in a minute. But if you recall, on Friday I talked about this trade setup when the market is testing a high, right? Comes up, tests the high, creates a bearish outside vertical bar, not only testing the high of the day, but the all-time high in the S&P at that time, the 1659 3/4 at the time, created that bearish outside vertical bar right here, closed right here, and the trade was a beautiful trade to the downside. Well, if you recall on Friday there, we also had another trade. So this trade actually occurred on Thursday. So on Friday, I spoke about, and I gave you the lesson on Thursday's trade, right? So on Friday, we were setting up just like that. Look at right here when the market came up and tested Thursday's high, we created the other price pattern that I look for on a retest of a high or a low, right? Remember, this one, we're talking about the bearish outside vertical bar, or for those of you that love candlesticks, we call it the bearish engulfing pattern, right, on the retest right here. So that was a nice trade to the downside. Well, on Friday, as I was giving you that lesson, the market was testing this high, right, was testing Thursday's high. We created that inside vertical bar, the opposite of an outside vertical bar, right, where the market contracts and there's some energy that's built up, right, the high is lower than the prior bar's high, and the low is higher than the prior bar's low. If you recall, on Friday, I went short as the market took out the low of the inside vertical bar. As the market took out 1657 1/4 to the downside, I was short, had that stop above the high of Friday that was put in place, the 1659 even. As you can see here, the market came up to 1659 even. And actually, if you take a look at this, this is a very good lesson. This pattern up in here is identical to what happened on Thursday. See that? So remember on Friday, I gave you the lesson on Thursday, right, when the market was testing the high of the day, not only the high of the day, but it was testing the all-time high, created that reversal pattern, the bearish engulfing pattern, right? Well, that actually happened on Friday as well. So, but we entered as the market put in that inside vertical bar. As the market took out that low, we were short. The market actually ended up coming up, testing that high, and creating the exact same pattern on Thursday. Look at this bearish outside vertical. Look at it. Took out the high of the prior bar, took out the low, and closed near the low here. The exact same thing occurred. Look at that downdraft right there. That resulted in roughly about almost a 4-point move to the downside. That same pattern. So 2 days in a row, got the exact same pattern based on the exact same rules and reasons behind the trade. Testing the high of the day, bearish engulfing pattern, came down, and this actually turned out to be the low. So here, let's take this a little further. So I just wanted to reiterate to you where I left off on Friday. So as you recall, the market came down, tried to retest the low of the day, consolidated for most of the day until breaking, look at this, breaking up to all-time new highs again. Okay, look at this. Took out that 1659 3/4 high, actually broke up through the round number of 1660 even right there. As soon as we broke up through 1660, the market was off and running. Look at this, up to 1665 practically. Market's extremely strong. Look at that, 1665 3/4. Let's go to a daily chart. Take a look at this, folks. Again, extremely, extremely, extremely strong. Again, I'm going to reiterate this because it's so very important. When the market gapped up, right, on this day, right in here in May, early May, and the market never attempted to try to fill that gap when it gapped open on May 3rd and didn't attempt to fill that gap right here. Market's been straight up, and I've been saying that for weeks now, that the market, there's no reason for this market to give way to the downside. Again, when the market sets up here, when we get some type of reversal pattern, I will lets you know exactly what I'm doing and how I'm positioning myself to the downside for some little correction. Now, I don't know how big of a correction there will be. Again, there's so many people saying how overextended this market is. Yes, it is overextended. It's really not normal or really healthy for the market to go straight up like it is without some type of consolidation or little minor correction. But it is what it is. The market's making higher highs and higher lows. You just have to go with it. And don't be fading this market until it gives you clear signs that the market will, in fact, start moving lower. Now, what I would need to see right now, from a standpoint of no reversal patterns, would be the market taking out this low right here. Because this low was an inside. This was an inside pattern. Remember what I told you a few days ago when we created this inside pattern, that if the market had taken out the low of the 1646 to the downside, the low of the inside pattern, I would have been short with a stop above the high. Well, the market never took out this low. Rather, it took out the high and the high of the year right there. So the market's just straight up. So no reason to be looking to short this market right now. I will let you know again when I am taking action to the downside. But until that happens, I am a buyer. So have a great day. And again, I want to just reiterate what I've shown you 2 days straight now. This is a great pattern for those of you that day trade. Heck, even if you don't day trade, you can take advantage of these patterns off of any time frame, any market, any time frame right here. This is just classic, okay? Look at 2 days in a row on an intraday S&P, E-Mini S&P 500 chart, right? Look at the retest. Look at this. About the same amount of period, about roughly the same amount of time before the retest. Look at that, with the bearish outside vertical bar closing near the low. You want to go short down in here with a stop above those highs. Same thing here. Bearish outside vertical bar, took out the high, took out the low, closed near the low, going short right there. So the shorts actually came in right there. Just to reiterate again, right there. And look at those nice moves to the downside. Again, your initial stop loss is above the double highs. Okay, so again, these same patterns, flip it around for the buys on a retest of a low, you'd be looking for the same thing. Okay, have a great day. Hope that helps. Bye for now.